Hey everybody, this is Rob Keents with the Freedom Report, and John Lee is back again to discuss what's going on in the gold and silver market. Also, he had a recent trip to Europe that I wanted to talk with him about, and then we're going to end up talking about some critical minerals and what's going on between the U.S., China, and the rest of the BRICS nations. John, thanks for joining the program again. How are you doing?
Good to be back, Rob.
So I saw you on the Kinesis channel recently. That was a great interview. Congratulations on joining that. I know that you covered a lot of different things there. One of the things that you kind of picked up on that I wanted to bring you back on to discuss is the correction of the metals. We had a nice run up in gold and silver. Gold about 18 months or so. Silver maybe 6, 8 months had been pretty hot. Then we get a big
Yes.
correction. What should investors take from that, John, from your perspective?
I mean, Rob, the gold rally started more than 3 years ago at 1800. It's really been a nonstop ascent, and until recently, it had about a 10% correction in a span of a couple of days. Last time we came on your show was about 10 days ago. I said that when gold takes out 3,800, it's entering into that parabolic phase, which is what we're witnessing right now. I am not. I mean, granted, and make no mistake about it, we're into the fourth or the fifth innings at this point in time, and I don't think the long-term top is in place. And the reason I say that is if you look at from a technical perspective, gold and silver are still well comfortably above the 200-day and the 50-day moving average. At the same time, if you look at in terms of global economy, we don't have any. I mean, there's not some any sort of a climax in terms of a finishing of a war or result of a financial crisis. Interest rates are staying pretty steady. And then if you look at in terms of global equity markets, Nikkei is at 50,000 and global equity markets are staging breakouts. So the conditions are not indicating that we are having a long-term top in place. However, I would not be surprised if gold and silver stays where we are in a range bound for the next couple of months. And the reason I say that is there seems to be a broad correction across the board as well as the critical minerals. You mentioned we talked about it briefly just before the show started. That critical minerals had about a 30% correction from their top, and there was all about when you hear the CNBCs and the Bloomberg and the Wall Street Journal talk about nothing but critical minerals, and probably likely there is a bit of a climax. So all of a sudden you have you have not even an event, but an instance where all the metals stage a correction from lithium to uranium to rare earth to all the stocks, including gold and silver. This is the time to be a little bit more discerning, Rob. So this is the time, not that all boats gonna float. You got to be a little more selective, both within the metals complex and also within the individual. If you're a mining investor, in individual mining stocks. So I think the first phase where all the boats are floating, that is kind of over. And you got to be a little more selective as to which particular commodity you're investing in. And if you're investing in the mining sector, which particular mining company has a good prospect. Because this first phase of all money pouring in is kind of running its course, and that the investor is getting more selective going forward.
Yeah, I think that's a good point, and I want to add in just on gold and silver specifically. The prices are out on these exchanges, not necessarily physical. You do it your dealer. So these traders, when they see that this thing's been running for a while, some of them are going to want to rotate out, take profits. Some of them are going to want to reposition. That kind of stuff goes on. So I was so surprised, John, at the way that gold had moved. Not only that it had been going for 3 years, but the last 18 months was the strongest single 18-month period in gold history I had ever seen on the charts.
Yes.
So I think we could expect there to be a little bit of a rest period before we hit our next.
A couple of things, Rob. I came on your program. I mentioned also on the Kinesis channel, which is an hour-long interview. I recommend your audience to check it out. It's not to do with inflation. It's not to do with the war. It's not to do with anything else, but to do with a marriage and implementation of combination of digital ID and central bank digital currency, carbon credits, and social credit score system. And it's already in the UK. They're already talking about, soon enough, Rob, in your bank account when you log in, you're going to see your carbon credit spent, right? And then you're going to see your social credit system spent. And then coupled with their digital ID. So that is coming on the horizon. That is the whole reason that the gold and silver are going up. And just to bring up sort of a bit of closure on that subject is that, when I went to Kinesis channel, the analogy that I draw is that people buying gold right now are not looking to to make a trade, to make profits, but rather to preserve their living standards. And when I say preserve living standards, we're not talking about, we're talking about not like upgrading Johnny Black Red Label to blue to black to blue, or upgrading your hamburger to a steak. It's a matter of ability to get a burger at 1 o'clock, strolling, taking a cruise on Pacific Highway 1 from Santa Barbara to Santa Cruz, right? Which I've done. So this is what we're talking about. This is what I stake, and this is why people buy buying gold and silver for. I want to also preface Rob about this correction. I want to give a couple of notes really quickly. I watch the market very, very closely. I want to give a lot of people asking, John, how do you know a top is in place? When gold was at 4,400 and silver at 56, 54, 50, 54, 54, 50, $55. What's happened that day, I think it was around 5-7 days ago, Rob. This is what the cartel does once every couple of years. At the market close at 4 o'clock in New York, they will start jacking up. The cartels will start buying futures. And then it will go, and then when Asia wakes up at 9 o'clock in the morning in Hong Kong, which is 9 p.m. In New York. So at 4 o'clock market close, the cartels are jacking up the futures from 4 to 5. And from 4 to 5, there's an hour pause from 5 to 6. So at 6 o'clock, they will start again cooking up the futures market, both gold and silver, until 9 o'clock Hong Kong. So that is the climax. And from 9 o'clock onwards, they will start selling indiscriminate. So the way they go about it is they will get the last sort of squeeze on gold and silver, and looking at all the FOMO guys, get all of them in there, and get all the short squeeze guys out of whatever it is. They want to exhaust all the buyings out there. And from 4 o'clock p.m. Eastern all the way until 9 p.m. Eastern, which will be the Hong Kong Open at 9 o'clock, from there, they will just absolutely thrash the market nonstop. And this is exactly what we saw. This has also happened at Christmas, I think about 2 or 3 years ago. I can't remember the timings of that, but I remember it was the very almost identical pattern. I took a little bit of trades off the table. But so we could be looking at a little bit short-term top in place, but I am not overly concerned about it because you're not seeing a correction across the board. What I mean by that is that you're not seeing equity correction. You're not seeing sort of any climax events taking place. So I feel pretty comfortable, but nonetheless, this is where we are. And one other thing is, what I mentioned is that the cartels, I want to be clear that of what you're working against on the other side of the trades, they own the printing machine. So you're not going to see like a JP Morgan covering because they're running up too much paper loss. They own let me be clear, they own the printing machine. The only circumstance or scenario where they'll be afraid to continue to short is that the physicals, is that there may be enough people coming in for the physicals of which the players in the market cannot deliver. And like, for example, today on the COMEX, if you were to enter, if you were to place, if your net position is over 100 silver contracts, you have to register and qualify for another tier. So 100 silver contract is 500,000 ounces. So these guys know very well who is holding in excess of 500,000 contracts on silver. And majority of the people, if they try to settle on physical trades on COMEX, instead of getting a physical, it's going to get a call from Fed. So I think they know the place very well, but every now and then you get a dark horse, right? You get a black horse, you get one of those out of the blue coming out for a big physical trade. But eventually, as I mentioned, the kinesis is that there was already a precedent 3 years ago, or maybe on your channel, that on the nickel trade, the London Metals Exchange holded the market. And because one of their member had extraordinary short position that needed to cover, and they were throwing the towel into the fire. So 3 years ago, the nickel trade on the London Metals Exchange, nickel was closed at $50 US dollar per pound, and they halted the market, and they arbitrarily set the closing price at 35. I would not be surprised at all if you see a $5 or $10 upwards of a silver trade that the COMEX could theoretically be halted. And the reasoning they're halting that is there's some irregularities. They can, whatever reasons, right? So nonetheless, I would say you're going to see a lot more volatilities. You're dealing with players, cartels that can whack the market for a week at a time for up to 10 to 20% even. So you want to be a little careful. Silver bottom is in. 50-day moving average for silver is around $45. It was almost there. It had a stage to rebound. But at this time, it could be a little range bound. And the reason I say range bound is that the dollar is staging a rally, which I had expected. I was just in Europe. You talked about it. I mean, it's in shambles. Entire Europe, especially continental Europe, is in shambles. I was driving on the highway in Italy for like 150 kilometers. They charged me almost 20 euro for a ride. And
Well,
gas,
welcome to the US, John. We got toll roads everywhere. If I commute
gallon
anywhere in
of,
Dallas Fort Worth, I'm paying anywhere from
it was
8.
20 euro. It's a $30 for 100 for an
Oh,
hour and a half.
some of our toll roads to get across just the Dallas Fort Worth Metroplex is $45 one way. And here's the kicker, John. All of these toll roads, the money goes to a foreign entity, which happens to be a bunch of companies in Italy. So nice segue to your trip to Italy.
And also in Chicago, all the parking
Yeah,
meters, highways, and tolls go to Saudi Arabia. And
yeah,
also BlackRock has already purchased something around 70% of the U.S. grid system. So they're
yeah.
not only going after your equity market, your housing market, they're going after your utility market and the transportation logistics. Is that and the gasoline, it was $1.70 euro a liter. So that's about almost $10 a gallon.
Hmm.
And that's why I'm bullish of the dollar, because everything else is supported in the dollar. It's yet to be seen how gold and silver will react with the rising dollar. But altogether, with all that said, I would not be surprised to see a range bound of gold between 4,000 and 4,400, and silver between what we are at around 47, 48 to about 54.
Yeah.
Until early next year, then you could have another run up, because the dollar right now is at about 99, and the 200 moving average is about 105. So we'll see if the dollar can take out 100, can take out 100. If it does, then you could be looking at about a 3 to 6 month rally of the dollar. And that would be the consolidation phase for gold and silver moving forward until the dollar tops. And then that will be another rally in store for gold and silver.
Yeah, good analysis. And just for people to know, we're recording this at about 10 to 10:30 a.m. Central Time on the 30th of October. Gold has just hit $4,000, 55 cents,
Yep.
up about almost $14, and silver's back up over 48.82. Um, Transitioning to what the heck were you doing in Europe? Tell us all about that trip.
Yeah, I was in a conference for fluorspar. So
Hmm.
it's spelled fluorspar, FLUORSPAR. I got actually a number of questions. I like, what are you talking about? How do you spell that? It was a record turnout, Rob. It's about 300 people turned out for this fluorspar conference. It's a get together between the buyers and sellers of fluorspar, which is the precursor or the minerals in the ground to extract and to concentrate into fluorine. And fluorine, as we mentioned in the last call, is used for really three major principal pillar or use for fluorine that's catching investors and and that's picking up demand. One is nuclear, Rob. Every uranium atom requires 6 fluorine to be gasified and then in turn to be enriched. And the second part of fluorine's use is, and that is really the principal driver of why fluorspar price has gone up more than 50% in the last 3 years, is electrolyte. People talk about anode and cathode, about nickel and manganese and cobalt and graphite. Those are the cathodes and anodes of a battery, but the medium of which the lithium and the sodium swim in between is hexafluorophosphate, and that's fluoride. And the growth has been explosive for that, but yet receive very little coverage. And the third use is semiconductors. We're getting very high tech in these. It used to be 20, 30 nanos, and now we're down to 1 nano and atomic level of precision in etching silicon wafers. And nobody else can do the job except the fluorine gas, of which is expert at etching and texturing your silicon wafer. So all those 3 major pillars has experienced tremendous growth, and that's driving fluorine prices going forward. And that's also driving the depletion of China's fluorspar reserves to the point where China become a net importer since 2022.
Yeah, and the interesting thing is, you said that last time, they became the net importer, they processed most of it, they're trying to suck it all up. And what's happened is the EU, China, and the US, I'm going to put this up on screen, have all declared fluorspar amongst one of the most important critical elements. We're talking about silver being a critical element this time. Well,
Yes.
fluorspar is right here in the middle. All of the big nation states, the first, the second, and the third largest economy in the world are saying we need more fluorspar.
Yes. Yes. You know, the situation for fluorspar, as I've been studying this market for 18 months, is actually more acute, more severe than, say, rare earth. And the reason I
Yes.
say that, China has more than 50 years of rare earth reserves in their tally. So rare earth really is entirely a geopolitics play. Whereas fluorspar, China has less than 10 years left. So China, along with Japan and Korea and the Germany, anybody who produces semiconductor, who has a nuclear power plant and who's into electric vehicles and the green revolution, we need fluorspar. And China is going after Africa and well, they couldn't go to Australia, but they're going after mostly Mongolia and Africa for their fluorspar supply. And you know, the United States has had a bit of a joyride, given it's all this fluorspar is coming from Mexico. But guess what? One Mexico cannot fulfill all the growth for electrolyte, for batteries, for all your iPhones, you know, out of China, out of Korea, out of Japan. That's why you saw traditionally the 20 to 30% discount of Mexican fluorspar to international prices has all but evaporated, because Mexico is already, because the biggest competition of export fluorspar has disappeared, and that's China. And China has started to import fluorspar from all the other places. And that's why it's good idea. It's opportune time that Rob, you and I came on this program now, in that all the two fluorspar company, including CleanTech, had a 50% haircut, just like all the critical minerals company, like rare earth, lithium, antimony, all of them has had a pretty severe correction in the last 10 days. And the market honestly is kind of a frothy when you look at rare earth mining companies are trading at $5 to $10 billion market cap. Antimony companies are trading at $1 billion market cap. I mean, there's some mining projects with just a trace of germanium trading at $1 billion, and U.S. government is dishing out grants and loans and investments in the billions of dollars to a dozen over plus companies. And I think one of the couple companies, U.S. investments got pulled out, government investment was canceled, and so that, along with the rally of the dollar and the correction of the metals complex across the board, creates a bit of a buying opportunity for discerning investors. But I want to preface one more time: you got to be very careful and very clear in the commodity you're buying and the underlying mining companies of which that has good merit that you're buying. Because at this point in time, there are some guys that had a correction; they're not going to go back to where they were just 2 weeks ago. So you want to be a little careful.
Let's talk about some of those companies in the presentation you have on your website. I'm just going to highlight this. CleanTech is in here. Talk about your position within this space. How does CleanTech set apart? If somebody's looking at a fluorspar play and they want to pick one or two, why does yours stand out, do you think?
I will focus on especially I think a majority of your audience is North American. I will focus, if you're looking into investing in fluorspar company, you will want to almost solely be focusing exclusively on US assets. The reason I said is there's critical minerals out of Brazil that are being slapped with 50% tariff. Even copper, which is also classified as the critical minerals, a lot of the copper sort of a semi-finished products also has a tariff on it. And as I mentioned to you in the last show, that even for silver mining companies, Mexican and US silver mining companies had they're starting to develop a gap in terms of valuation, where there's a premium being placed on mining companies in the United States. So right now, there are only two fluorspar mining companies focusing in the US. It's all public information. You can read about it. But our peer is a company called Aris Mining. So they're developing a project in Utah. I think they're maybe closer to production because they've been around for 5 years. And their stock went up like 3 times in the last 3 weeks, and we have more than doubled as well. However, CleanTech has about double the land package of Aris, and CleanTech has a historical resource of close to 10 million tons of fluorspar. And last time I checked, that Aris hasn't published any fluorspar resource, both either 43-101 or historic. So for all the critical minerals, I will focus a lot on US centric. And the one other thing is, Rob, in the United States, which is a great country. I was educated there. It has all the minerals you need. It has fluorspar, it has rare earth. It's just about 2/3 of the states in the US are not pro mining, right? Like states like California, where if you were to do a mine, they only approve a mine if at the end of the mine life, you restore the site to exactly what it was look like. So I mean, that's almost an impossibility. And there's a lot of rustic states, like iron belt states like Michigan, Wisconsin, and all that used to be the renaissance of major iron production and a lot of other metals production. But a number of those states had really been staying dormant for the last 2-3 decades because of environmental concerns. So it's yet to be seen how if a comprehensive a framework could be developed under this administration to advance production of not just critical minerals, but there's a range of elements that require in the periodic table that require to be developed in the United States for it to be independent from outside countries.
Yeah, and I wanted to talk a little bit about just in general what the United States is doing positioning from an overall level. They spent about $4 billion, I think we mentioned last time on the program, and I've mentioned many times, $4 billion on buying silver and redeveloping silver industry in the U.S. $8.5 billion deal with Australia on rare earths, not only buying rare earths but developing mines and including processing. And part of the $550 billion deal they did with Japan also focused on critical minerals. So and South Korea as well, not only critical minerals, but some of the things that come out of the critical minerals, such as technology and that type of thing. So Trump is running around right now like a chicken with his head cut off, trying to secure deals for critical minerals. And if you're as an investor, if you're kind of looking to see where you want to go, you've got your gold and silver, but maybe you want to diversify a little bit. Looking at these critical minerals is super important. The deals are being done, and we're in a mineral resource war. 5 years ago at Metal Mines and Money conference, I said we're about to enter a resource war, and I think, John, we're there. What's your thoughts on that?
I like the idea. At least this current administration is bringing awareness to the forefront.
Yeah.
And we were clean tech was developing the vanadium project when during Trump's first term. Keep in mind, a number of these projects with just permitting, drilling, exploration, bring the project into feasibility study and the different permitting, especially on federal land, is a 5-year affair. So, and a lot of these projects you talked about, if it's in a rural area, then you have to build potentially a port or a railway or road or power. That's another billion. I mean, now, back in the days, 20 years ago, if a project is 200 million, it seemed like a hawkish, right? But now, just a road or a railway is $1 billion. So $1 billion is almost like the starting point of any scalable project. But if there's an infrastructure requirement, then you're looking at $3 to $5 billion. And a lot of that might not be come to fruition under this administration, which is already 1 year into the road. So you want to be, I think, first of all, I just want to circle back to what I was saying. You want to be very selective of the underlying commodity that you're going for. And then secondly, when you're going after resource, not only after the big, flashy, $1 billion, 10 billion in the ground, but you also want to do a bit of homework in just call up the CEO and request a call, right? What are the obstacles? What are the things are required to put the mine to production? How far are you from your customers? Are there roads? Are there access to the project? And so you want to be like I want to give you an example. A good example is, say, graphite. Graphite is being talked about a lot as the anode for the batteries. But the technology, as I was sitting through 3 days of conference, there's a lot of synthetic graphite is being developed that can replace a natural graphite. So you have to be real careful in graphite as an example. Another good example is I will talk about synthetic diamonds. It's another perfect example where synthetic diamonds are coming out. A carat diamond, synthetic diamond manufactured like lab diamonds could sell for less than $1,000 now. And when I get married, my engagement ring was 1.5 carat. I paid $13,000. And that ring, if I were to buy identical lab grown, would be less than $1,500. If you buy a natural diamond, the price has gone down 70%. So you want to be a little careful, and that, especially when you talk about critical minerals, which in the end is industrial usage. When the prices go up double or 3 times, it's natural and it's inevitable that replacements or substitutes could be found. So I like fluorspar a lot because it has that different elements of applications. A lot of them are not going to be found replaced, not going to be found in the near-term horizon. But there are some metals like, for example, cobalt, right? For cathode, it's being replaced by iron, and even lithium is being replaced by sodium, and then graphite is replaced by synthetic graphite, and which so you got to be a little careful in not labeling all the critical minerals as one. Even rare earth, there's a ton of rare earth in the United States, in Australia, as well as in China. So that is not probably a trade that I would be very enthusiastic about. But Rob, I also wanted to mention a bit. Some of the investors are into uranium and solar and batteries, whatnot. Is that there is a second coming of the electrification revolution that's happening. I highly urge your audience just to Google. You can go to some of the channels like Undecided or Electric Vikings. In that lithium, the cost of the batteries used to be $500 kilowatt hour. It's going down to $50 in kilowatt hour because of sodium ion batteries. So sodium is replacing lithium as the element that holds transport charges. And used to be that the technology advanced so much that the only impediment for sodium batteries used to be charge density. That has largely been overcome due to technology. So a sodium battery can hold up to 70% of what a lithium battery holds, given the same weight and dimensions. So now you're seeing China is now, I would say in 2 years' time, you're going to see equal number of lithium and equal number of sodium electric vehicles on the street. But that's not where the growth is. Rob, the growth is the sodium ion batteries being deployed right now in the gigas and tens of gigawatt hours in China, also in the United States, to complement solar energy. So solar power right now is at around 2 or 3 cents kilowatt hour. But the problem is it's not a base load. But if we were to get a sodium ion batteries at the cost of $50 kilowatt hours, then the combination of solar panels, solar power, and the sodium ion energy storage combination could be selling at less than 5 cents a kilowatt hour as a base load. So that would be half of coal-fired power plants, and that would be about 1/5 or 1/10 of nuclear power plants. It's called a levelized cost, which factor into the capital expenditures as well. And so therefore we're entering into a renaissance, and that's going to further suppress the oil and energy prices, which is good for the markets. But you just want to be careful when you're going into the guys that worked before. You've made oodles of money on lithium or on cobalt. It's not the same. It's not the same story, not the same song that you're seeing today versus say 3 years ago.
Yeah, that's something I point out. I also wanted to share with people I'm doing a 3-part masterclass. Part 1 is out on my channel about precious metals mining. And it's about an hour and 6 minutes where I talk about my experience going to mine, mostly gold and silver. And I talk about going to the mines, talking to the geologists. I've got lots of information here about what I actually saw. And then I have Jerry Huang, is a good friend of mine, who's CFO, Impact Silver, and principal at Gemini Capital, talking about the financial piece of it. If you're going to be interested in getting into mining stocks, definitely take a look at this free resource for people here on the website. There's a risk management piece at the end, which talks about what you were talking about, John. You want to look at management. You want to look at the fundamentals of the project. You want to look at the geology. You want to educate yourself before you get in the field, John, because it's really important to be able to separate maybe more of the promotional stocks from the ones that may have longer term value. Because certainly if you're going to get into this space and you want to be in it for a while, first of all, know if you're getting into mining stocks, you're not in for 3 to 6 months probably. You're probably in for a little bit longer than that, to be fair, to really get that value. What Jerry and I talk about in this presentation as well is that the earlier you get in, the higher your upside. There's more risk, but you get the upside. And I think that's what you're referring to. But just make sure that you go through that presentation. It's free for everybody. Lots of resources and materials in there for you about looking at resource grades and things. And I wanted to edify what you said, John. I think you made a lot of good recommendations to our listeners here, and I appreciate you doing that. As we wrap up this video, thank you for coming back on. What are last thoughts that you want to leave with the audience?
Yeah, be selective of your mining issuers. I would really say that check out Cleantech, companies Cleantech Vanadium Mining Corp. The symbol is CTV, Charlie Television, Charlie and Tom and Vision. So I mean, it's gone from 50 cents at the top right now. It's trading at low 20s. I bought some in the market, and we have some of the largest fluorspar users in the United States that has come to us unsolicited and hit me up at the conference. We had hours long of conversation. And we're very excited about moving and producing fluorspar in the U.S. to fulfill the U.S. demand, and also discussing in working together along with the U.S. government to try to secure all the easiest funding possible to put mine into production. It will be a mine for sure. The area have been producing fluorspar for more than 50
Well, does
years.
the U.S. have any choice but to make it a mine? Because if it's being to be a critical mineral, at some point the government's going to say, "Well, we got two choices here. We want both of them."
It's under our watch or somebody else's watch, right? So, but you know, I've been around for 25 years. Rob, I know for a while. One of the things that you mentioned about due diligence is look at the insider holding, right? Because we're not going to be issuing stocks at 10 cents when the stock is 20 cents, with a full warrant. If the insider holdings are there, insiders are buying the market. That's one other thing to make sure that the management interest is aligned with the shareholder. That's a critical mineral. That's the critical point, because a lot of guys are there just collecting salary. Unfortunately, I will even go out on a limb to say that 80% of the junior mining companies management out there just collect a salary. Like they will raise money and then they will drill a couple of holes and they're out there onto their winter vacation in Arizona and the summer golfing courses. It is a part-time job for a majority of these people. You just want to be a little careful on that front.
Yeah. Thank you so much, John, for joining the program. Again, we appreciate your comments on gold and silver and on the critical minerals. We'll have you back on. Thank you, everybody, for joining the Freedom Report. Remember, stay tuned to our channel as we release the second and third parts of this masterclass over the next 3 to 4 weeks. And all of it's free just to help you understand how the mining sector works, how the distribution for gold and silver works, and the pricing for gold and silver works. And that mining class you can apply to all of the different potential mining assets you want to go after, especially if you're going after rare earths or some of these other critical minerals. Until next time, this has been Rob Keens and John Lee with the Freedom Report.